Well, Marcus was just talking about the Nikkei. The dollar has been sitting near session highs against the yen today. What are the charts, though, telling us about the currency pair? Max Knudsen is a chief market strategist at ADS Securities, and he joins us from sunny Abu Dhabi. Max, the dollar-yen story, is it intact?
Hello, Louisa. Yes, it's not sunny here, it's nighttime here now, but we're still busy. Yes, I like dollar-yen this week. My call is positive for sentiment, and there are two main reasons why. The first chart I've got for you shows that over the last 8 months there has been a significant improvement in dollar-yen without any real correction or pullback. Now, we have had a pullback. It hasn't changed the long-term bias, but it was a very anticipated pullback. And since the high of 103.74, the market has sold off by 900 pips. Now, for me, the most significant point about that, Louisa, is where the correction went to. And since we got back below 100, the most likely target for this pullback was 94.75. Now, that's important because it equates to a 50% correction of all of this year's gains. And if you're a longer-term investor who has taken some profits in this recent 900 pip sell-off, the opportunity to get back into the market at levels nearly 50% cheaper than the high would have been very attractive. And equally, if you're a bullish investor who felt underweight in yen, the opportunity to buy the market 50% cheaper from the high just a few weeks ago would again have been equally attractive. So on Friday, we got two reasons to buy the yen. The first was that prices reached within 25 pips of this 50% level. And secondly, we had slightly better than expected US data. Now, the next chart is a daily chart, and what I want to focus on there is how that buying developed on Friday. In fact, Friday formed what we call in the markets a bullish hammer signal. Now, this is a pattern of trading that's usually consistent with exhausted negative sentiment after a sell-off and the start of an improvement. And that's been further supported today with the better GDP numbers and the consumer confidence numbers, which are the strongest since 2007. So you put all that together, we've had an improvement of 400 pips since Friday's low, and I think it will continue this week. My first target is for buying through 100.12, which is a trend of lower highs, and then up to last week's top at 100.74, maybe even as far as 102, but certainly my target's 100.74 this week.
I guess also the upward revision to the GDP data in Japan typically causes people to buy equities, which pushes the yen lower as well. So on from what you were talking about on Friday.
Yes.
Let's move on and also just include sterling in this little chat as well. You brought us a chart including the UK currency.
Yes, I'm positive on sterling for this week, but more cautiously so. Now, over the course of last week, sentiment signals quite clearly showed that the market was undergoing the largest improvement in 3.5 years. On a day-to-day basis, trading was supported by a pattern of dip buying or trend of rising lows as investors were buying any pullbacks. So the result was a rally of 500 pips. Now, coming into this week, that's brought us back towards or above 156, and that equates to a 50% recovery of all of the year's losses. Now, there is the potential for some profit-taking selling after this 50% recovery, and in fact, that's what limited the market the last time we were back here in May. I'm also slightly concerned about the way the market's traded in the past 9 months. Because if you look at the way it's traded, there have been rallies, but each of those has never lasted longer than 2 weeks, and we've just had 2 weeks of gains. So the question for me is whether sentiment is slightly different this week after 2 weeks of gains and with prices at the 50% level. I think it could be. We have a trend of rising lows that shows investors are buying dips, and we've had slightly better numbers from the UK. The manufacturers' activity increasing to 54.9, the best in 14 months. And 4 increases in prices over the last, increases in price over the last 4 months.
Max, I'm
so I think
sorry.
It could be more positive, yes.
Max, we've got to go. We're up against the clock. We'll see you very soon again. Max Knudsen, Chief Market Strategist from ADS Securities. We appreciate it.